I'm sitting in my hotel room at the Hilton Garden Inn in Perrysburg, Ohio. I can see 475, I think it's south, outside my window, and about probably 10 miles behind that, I can see the three tallest buildings in Toledo, Ohio. I'm here with my whole family because Burge's grandma died 2 weeks ago. Actually, 2 weeks ago to yesterday, she died. And her grandma was her parents to her, not just her mom or not just her dad, but actually both her parents to her. Um, and so it's just with great loss that it's almost as if she just lost both her parents. So we are here for her memorial service, and it's cold. It is cold here, and it is just it's actually kind of fun to be here. I grew up in the Midwest. I spent 22 years living actually in the Great Lakes states. Lived in Ohio, Indiana, Illinois, Minnesota. My parents grew up in Wisconsin. Lived in Pennsylvania. So lived in almost every state that touches the Great Lakes. But coming back to the Midwest is great. I forget so many things about this place, even though I've spent half my life here. So you get me on a day where it's somber because the only reason I ever wanted to come back to Ohio was to see Tib, and Tib is Burgess's grandma. That's her name. That was her name her whole life. It was her nickname. So I kept thinking, oh yeah, we get to come back to Ohio to see Tib. I'm like, oh wait, Tib's dead. Wait, why are we going to Ohio? Because there's nothing here now for us, except we used to visit her. So this is where you have me today. I hope you guys are doing well, staying warm. My brain forgets how cold it can get in the Midwest in November, though I'm loving the cold because it just does not get cold in Silicon Valley. So with that, we have the weekend podcast. The theme for this weekend's podcast is the line in the sand. And there are 4 lines, resistance and or support lines, that I am paying attention to, and that I think the rest of the world at some sort of conscious or unconscious level are paying attention to. And these 4 lines are all interrelated. They're all entangled with each other. And I think they're 4 lines that part of your attention or a lot of your attention should be looking at. So what I want to do is share with you those 4 lines. And basically there's 2 pairings. So there's 2 lines that go together for each pairing. So I'll talk about that when I go through them. But let's talk about the line in the sand, or the lines in the sand. So the first one is junk bonds. Junk bonds are very important. Bonds are very interesting. And unlike stocks, bonds are either working or broken. There is no in between. There is no declining earnings. It's either they paid out what they owe you, or they didn't and they default. So it's a black and white. But we have junk bonds here, which are the riskiest corporate bonds that you can buy. And as you can see with the price chart here, the price of junk bonds is down to the lows of 2011, when this guy named Ben Bernanke came out. And over here you can see it in October of 2011 to the left, lower left part of the chart. This guy named Ben Bernanke Ben Bernanke came out, and at that very day he said he will print $1 trillion more dollars. It's incredible just saying the word 1 trillion. And yet you can see what junk bonds have done since the end of 2014. They've been falling. The price has been falling. They hit a low in October, which was the same low in October of 2011. And junk bonds are right back to that price just a month later. This is an incredibly important support line, and I believe, in my humble opinion, this support line has to hold. And if this support line doesn't hold, it's going to be very difficult. It can still happen, but it's going to be very difficult for the stock market to move higher, because this will be the canary in the coal mine saying something's off, something's wrong, something's not working. So that line right there, the first line we're looking at, is the support line for junk bonds, and incredibly important. Now the pairing of junk bonds. Now this price chart, this is a price chart of junk bonds. In this case, the color of junk bonds is, I guess let's call it purple, And I have the same horizontal line in that you saw in the previous chart, but it's purple because that's the color of the price of junk bonds on this price chart. And then the red line is oil. So the second support line that has to hold, that has to support it, I believe, is this red line for oil. It's got to hold right here at the lows, the low price of oil of 2015. Because even with oil dropping, has not dropped below, I believe that's $38 a barrel, West Texas intermediate crude. You can see up here, junk bonds are really, they did not break up. They're right back to the same price. And what oil does here is going to have an impact on junk bonds. What junk bond prices do are going to have an impact on the stock market. So oil, the price of oil, and junk bonds there's a high correlation going on right now with them. And part of the reason is because $500 billion was lent to the energy industry to drill and frack, do horizontal drilling and fracking. And there's a lot of belief in the energy industry that oil is going to get back to $60, $70 a barrel. And if it doesn't, a lot of loans are not going to be able to get repaid. Now, the energy industry bought some time by flipping their loans. So there may be a little bit of time here, but that $38, that low back in August, I believe that's August, is another support line that has to hold. So now we have two support lines. We have the junk bond price support line, and we have the oil support line. Two important lines. And people might say, well, it's just energy, and energy is only one of 9 sectors of the S&P. But I wouldn't say that, because it was just technology back in 2000 that got crushed, and technology is really only one of 9 main sectors. So I wouldn't say if one of the sectors is doing really, really badly, the other 8 will ignore it. I actually don't agree. I think when one is having a traumatic loss, and it's a pretty big one. I mean, it's energy. So we'll see. I'll keep an eye on this. Now, the third line actually is a resistance line. So the first 2 were support lines, and the third one here is a resistant line. And this is the biotech sector. And the reason I have the biotech sector in here is because biotech has been leading since 2011. Has absolutely been leading for the last 3 years, all through 12, 13, 14, and 15. So 4 years. Biotech's been leading the markets higher. I mean, moving 200% faster than the S&P 500. And you can see that red resistance line there that biotech wants to break above. And I believe if it does, that's going to put a lot of elevation, or give a lot of loft to the overall market to pull it higher. Now, I know we just talked about junk bonds and energy, and so we got a little bit of a kind of a tug of war going on right now. Like, it'll be interesting to see if biotech breaks higher and junk bond price breaks lower. But I believe that this junk bond sector, it's actually a subsector. The main sector is healthcare. It wants to go higher, and it's looking for a reason to go higher. And if it breaks that resistance line, that's going to be very bullish for biotech itself, healthcare too, and the overall market. Which leads me to the fourth and final line, and it's another resistance line. So we had 2 support lines, and we had 2 resistance lines. Now, this is a resistant line for the S&P 500, and man, the S&P is having problems getting above this 2130, 2140 line. Keeps knocking its head on it and falling back down. And depending on how you measure it, it tried to get above it twice here, another time here, another time here. So for sure 4 times here, and kind of failed 4 times. Wanted to get up and definitely stalled way, way below that, and is looking to see, the price is looking to see if it can get back up here. But again, that's a pretty strong resistance line. That is a very strong resistance line. So it would not surprise me if the S&P bounced off it again. And if you're bullish and you want the market to go higher, this is the line that you want to be paying attention to. This is what you want to see the S&P break above and maybe sit back on top of it, but to the upside, to the top side, and then move higher. And if biotech moves higher and the S&P moves higher. And for right now, there's a stay of execution on the junk bonds and energy. So if energy just kind of bounces around in the 40s for the next year, that's very likely that junk bonds will just kind of meander, even if they just fall a little bit, but just kind of not a lot of volatility. Then that means we have a pretty good upside in the S&P and the leaders of the S&P. So the two main leading sectors of the S&P over the last 3 to 4 years have been healthcare and biotech, though let's just call that one because biotech's a subsector of healthcare, and consumer discretionary, which is pretty amazing. So things you don't need to buy, but you buy when you have enough money to do it. So what is the takeaway? We talked about 4 lines, 2 support lines, and 2 resistance lines. So the takeaway is that price matters most, right? Price, the actual price of something matters most, and really, to be specific, the direction of the price. That's what matters most. That's what grows your accounts or shrinks your accounts, is the direction of the price. And support and resistance lines can greatly help you manage your losses and accelerate your accounts. And that's what I do a lot, is look at where are the major support lines or resistance lines. Where are these lines and what are they telling us about, hundreds of millions of free thinking investors on this planet, and what is going on kind of that mass psychology. Like, what is that pattern telling us of what people believe? And right now the pattern is telling us, hey, you better give me some really good news for the S&P to break higher, for biotech to break higher. Like, give me some good news. And look, the news can come. It can come from Mario Draghi. He can come out and say, hey, we're going to print much more money. Now, so far, Mario Draghi has just been kind of saying, yeah, I'll do whatever it takes. If you don't know who Mario Draghi is, he is the European central banker. He is the Janet Yellen of Europe. And Europe is a much larger economy than the U.S. In fact, the European bloc is the largest economic bloc on this planet. So what Mario Draghi does is very important to the rest of the world's stock market. And then we also have to think about what Janet Yellen's going to do in December. Is she going to raise the federal funds rate up 0.25%? The market is thinking more and more that she is going to do it. And if she does do it, then we have to look at other lines in the sand with commodities specifically, but we will do that on another day. Hey guys, this is just another step in helping you protect your portfolio and secure your future. Until next time, this is RC Peck. Hey guys, thanks so much for being here on my weekend podcast. I love sitting down and looking through all my price charts and figuring out what I think is most important for your brain and attention to be looking at. And I do my best to make sure that I don't just, I don't kind of regurgitate what other people are saying, but actually look to the charts and see what they're saying and give you fresh points of view. If you are noticing yourself not in action, right? Content is not enough. Content is not the answer. The answer is being in action and having your money in the markets properly for you. And some of you may notice that even just having a conversation with me is the thing that can make a difference most in your life. And that's one of the things that I do with people in my world, and you're one of them, is to sit down and look at your positions, look at your behavior, and give you suggestions and ideas of what can help you protect and grow your future and your portfolio best. That next step, parts of you are already interested, that next step is super straightforward. You just reach out to Patty and she can send you a link to get you started with that. You guys have a great rest of your weekend. I'll speak to you guys soon. Bye.